Hey y'all, welcome back to Terry's Tax Tips. Today we're talking about standard deduction versus itemized deductions. When filing your tax return, you'll have two options. Take the standard deduction or file itemized deductions. Now what are these deductions? The standard deduction is a flat rate based on your filing status. So for 2023, if you are filing single, your standard deduction is $13,850. If you're filing head of household, which means you are unmarried with at least one qualifying dependent, your standard deduction is $20,800. And if you're married filing jointly, your standard deduction is $27,700. Now remember, a deduction reduces your taxable income. Now, let's say that you want to itemize your deductions. There are a few things that you can include on your itemized deduction. The first thing is going to be medical and dental expenses. This is a difficult deduction to take because you're only allowed to take expenses that are 7.5% above your income. The second one are going to be taxes you paid. Now this can be real estate taxes, state income taxes, local taxes, property taxes. All the taxes that you've paid for these items could be included on your itemized deduction. However, thanks to the Tax Cut and Jobs Act, your tax deduction is limited to $10,000 for itemized deductions. So let's say that you paid $7,000 in real estate taxes and $10,000 in state income taxes. You can only deduct or write off $10,000 total for taxes. It is limited. The next part of itemized deductions that you could potentially take is real estate interest. So interest you pay for your home, this is not limited. So at the end of the year, when you receive your 1098 mortgage interest statement from your lender, they will tell you how much you paid for the year. This number fluctuates based on your loan amount and your interest rate. So even though you may have purchased a home, unless that's a pretty high mortgage, you may not be able to take itemized deductions. The standard deduction may be better for you. Another item for itemized deduction are going to be charitable gifts. Those deductions could be included on itemized deductions, but if you're taking the standard deduction, it will have no impact on your tax return. So once you figure out each item for your itemized deductions, you'll add them all up, and if they total more than your standard deduction, then taking itemized deductions will be more advantageous. So I recommend entering in all of your possible itemized deductions, and then you'll be able to see if your itemized deductions add up to more than the standard deduction for your filing status. If they do, congratulations, you're able to itemize, which will give you a better tax result. Follow so you can get all of Terry's tax tips.